ELF stock dropped a staggering 35% after they announced their earnings. It's trading at $76 at the time of this recording with a market cap of $4 billion. Now, we've done a few videos on ELF in the past. In the first video we did April of 2024, we set at $160 and we said it's not a good risk reward. But in September of 2024, we covered it again when it dropped to $114 and said it can do a 2x in 5 years. We did buy the stock and currently have 45 shares at a $97 cost basis. In this video, I'm going to talk about whether $76 is a good cost basis to start a position or to dollar cost average. Before I move on, I'm just going to ask if you can smash that like button, subscribe to the channel, and let's continue growing together. I want to clarify, this is not financial advice. I'm not qualified to give financial advice. I'm simply recording my thoughts about ELF Beauty. Let's first look at the main reason why the stock dropped 35%. Shares dropped 30 to 35% after the company reported mixed quarterly results and issued a weak outlook for the full year. Third quarter revenue was about $344 million, up 14% year over year, but below analyst expectations of $366 million. Adjusted EPS came in at 68 cents, beating estimates of 57 cents. Operating margin fell sharply to 2.2% from 9.3% last year. This is mainly due to tariff-related costs and higher SG&A spending. About $50 million in annual tariff costs expected, as 75% of reduction is sourced from China. Investors reacted negatively because of the outlook, signals slowing organic growth and having a hard time making profit despite top-line gains. Let's now look at the numbers for 2025. For the full year, revenue is estimated at $1.55 billion. Adjusted EPS is down 17% year over year. Organic growth was only 3 to 4%. Gross margin dropped to 69%, pressured by tariffs. Net income expected to fall to $165 to $168 million from $198 million last year. Now, key drivers for this weak outlook are heavy tariff costs, supply chain challenges, increased marketing and SG&A spent to maintain market share, and consumer spending softly in the beauty category. So what's next? Let me now show you two valuation. Make sure to smash that like button. Now, the first valuation assumes that there is no revival and ELF will continue to struggle. In this case, I am estimating 10% annual growth to put them at $2.26 billion in 2030. Remember that they are guiding for $1.56 billion this year. I assume 12% net margin based on 69% gross margin on the lower end. Multiple of 25 puts them at $121 stock price by 2030. This is a 59% gain in 5 years. Now, I personally think that ELF has a lot of ingredients to do the revival. Tariffs should stabilize. ELF has unique positioning as they are a budget-friendly makeup with good ingredients. Consumer spending on makeup will have to come back. They are the number one brand in Target and have positioning in different stores. International growth is another chance as well. So overall, I am confident that they can get to 15% annual average growth to get them to $3 billion in revenue by 2030. Based on the 69% gross margin, they can get to 17.5% net margin. Now, I assume a 30 multiple, which puts them at $281 stock price by 2030. This is a 270% gain from the current price of $76. Now, personally, I am a buyer of ELF at $76, and I think it is attractive at $76. I may add to my position in the coming days. What do you guys think about ELF Beauty? Let me know your thoughts in the comments and see you in the next video.